Hello and welcome. This is my first video and it's just a really simple explanation of some of those basic financial terms that we will use in business. You'll hear businesses talk about their turnover, which is often very high, and it sounds amazing if a company has a turnover of, say, £1 million or more, but it really doesn't tell the whole story. What you need to remember is that that is all of the money that goes through the business, and there will be a lot of expenses that come out of that. Profit is the money that is left after expenses. So that might include the materials that it takes to make the product. It will include marketing and advertising. It might include heating and lighting in the building. It might include rent. It will certainly include wages for staff. All those expenses that a business has. We'll look at that in more detail in a different video. A quick word as well about tax. All of us pay taxes, businesses do too. Gross profit is the profit that they've made before they pay their tax, and net profit is the profit that they really have after that tax has been paid. Rates of tax do vary depending on a whole load of different things, and you can look up more about this online if it's something that interests you. But for these purposes, we're going to take 20% as the average of being the rate of tax for a business, just so that we can have a look at the kind of calculations a business would make. I'm sure some of you will know this, but just for those who do struggle a little bit with percentages, 20% is equal to 20 out of every 100. So if I had £100, my tax would be £20. Now, hopefully I've got more than £100. So this is the calculation that I would do. 20 over 100, 20 out of 100, times the amount that I've got. I've just done the example of £100, so I've ended up with 20. If my percentages were different, let's say I wanted 25% of £300, 25 over 100. Okay, so now it's time to see what you've learned. Here are the sales figures for company A for a whole year. I would like you now to work out what is their turnover, their gross profit, and their net profit for the year as a whole. You can use taxes being 20%. I'll give you a few seconds to have a think about that and do some calculations. So how did you do? To get your turnover, you should have added up the total income for the year. Now we can see on the table that the figures we have are for quarters of the year. We have a column for January to March, a column for April to June, a column for July to September, and finally a column for October to December. So the total income for the year is those figures added together, which is also our turnover. 1,500 plus 2,000 plus 4,500 plus 500 equals a turnover of £8,500. Remember to put in the pound sign as well so that we know we're talking about money and not anything else. Gross profit then will be that figure minus all of our expenses, again in each of those four columns. This time we're looking at the bottom row, adding those together to get 500 and taking it away from our original turnover figure. So our turnover minus our expenses is our gross profit of £8,000. Finally, to get the net profit, we're going to take away that 20%, and you can see the calculation there, which leaves us with £6,400. If you managed all of that, very well done. Finally, just a quick word about some of how that money works. A lot of you will be thinking about starting a new business, or you'll be doing so as part of your project work for your course. when we start something new, very often the costs are very high and the takings are lower. The costs are high because equipment is needed that may only need to be bought once. If I'm going to be a chef, for example, I need to buy my cooking equipment, my utensils at the beginning of my business, which obviously I'm not going to need to do every month. I'm also probably going to take less money to start with. I'm not yet well known, and I need to get to that point before I can start to make more money. Often it's also necessary to do a lot more marketing at the beginning of a business. So I'm sure you can see that this will affect our turnover and our profits. It will mean that we make less profit at the beginning of a business. In fact, a lot of small businesses don't make a profit for the first 12 months or so, perhaps even longer. That means that we need what we call capital to start with. Either the business owner themselves, the entrepreneur, or perhaps an investor will put some money in order to get that business started, hoping, of course, that as the business grows, they will get that money back. So, how can we make more money? How do we increase our turnover? Perhaps the most obvious way would be to sell more of whatever we're selling, whether that's a service, like say a hairdresser, or whether it's a product. We could also sell at higher prices if we know that the same number of customers will still buy from us. We could increase our product range and sell more different things, which would hopefully increase the money that we take. Also, we could look at making sure our customers return. If I sell somebody a book once, I might have made £10. If I sell them a book every month, I've made £120 over the year. Finally, add-on sales are really important to businesses. That's why when you go to a burger bar, they'll ask you, do you want fries with that? Do you want a drink? They're adding on more money to the sale by offering you extra items. Remember that turnover is only part of the story. We can also increase our profits by lowering the amount that we spend out. We can increase our turnover and we can lower our expenses, perhaps by reducing our costs, by buying stock in bulk, by employing less staff, or maybe even by paying them less, although they might not like that much. We might be able to reduce the cost of our equipment or our transport. In fact, there's all sorts of ways in which we can cut costs down as the business grows, and that too will increase our profit. Thank you so much for watching. So just to recap, remember that the turnover is all of the money and the profit is what's left after all of those things that we take away from it. We pay tax, gross profit is before tax, net profit is after tax. I hope you found this really useful. If you did, please give me a like and come back and watch some more of my videos. Thank you. Goodbye.